Hello, everyone. Caleb Janowski here with the day team at Cornerstone Home Lending. Thank you so much for joining me for my mortgage market update. It is March 19th, and we are going to jump right in. I'm with the day team at Cornerstone Home Lending, like I said, and we're going to start out our meeting here today with mortgage interest rates. What you are seeing here is a year-to-date trend of mortgage interest rates. This is a chart that is published by Mortgage News Daily. They are an aggregator of mortgage interest rates, so they collect information on 30-year fixed rate mortgages from a variety of different mortgage lenders. Well, what we've seen here is that at the end of February, we were really at 3-year lows, and there was a lot of positive optimism for lower mortgage interest rates to continue. Since then, we had a war with Iran kick off, and over the course of that past 3 weeks, we have seen mortgage interest rates move to their 7-month highs. Okay, so what drives mortgage interest rates? Well, that would be mortgage bonds. Each and every day, mortgage lenders will look at a mortgage bond chart, really the demand side for mortgage-backed securities, and they will price their mortgage interest rates accordingly. When a mortgage lender, when we as a loan officer are meeting with clients to talk about whether or not we think they should lock in their interest rate on a given purchase and or refinance, this is the chart that we are looking at. And if you can put two and two together here, you can see that as mortgage bonds move down, okay, mortgage interest rates move higher. Okay, this is the end of February here. We are sitting in a good spot. And since the war with Iran started, we have seen mortgage bond prices move much lower, breaking beneath one, two, three, four, five levels of support, which is not great news for mortgage bond pricing, nor is it good news for mortgage interest rates. We saw a little bit of a tick up here earlier this week, but again, as the war escalates and as the energy crisis deepens, we're going to continue to see higher levels of mortgage interest rates and lower level of mortgage bond pricing. Okay. The other big news this week was the Federal Reserve meeting. That was yesterday, March 18th. The not so surprising news here is that the Federal Reserve did not change the federal funds rate, and it remains unchanged from 3.5% to 3.75%. Okay. The dual mandate of the Federal Reserve is two things here, and Jerome Powell highlighted them both in his speech. Okay, so what does the Federal Reserve highlight? Well, they want strong job markets and they want no low inflation. Okay, well, that really this past meeting was not an ideal meeting for the Federal Reserve because, as they highlighted in their analysis, we had really no job growth in 2025 and very little job growth so far year to date. And that would include a loss of 92,000 jobs in the month of February. We couple that with what the Federal Reserve is forecasting for the remainder of the year in inflation, is where they're seeing inflation tick up from 2.5% to 2.7%. So no job growth and a slight increase in inflation, that does not bode well for mortgage interest rates, or really that does not bode well for the Federal Reserve being able to cut more times this year. Okay, and that leads us to our last point, which is the quarterly economic projections. And we get that Federal Reserve dot plot. Ultimately, the dot plot is a survey of all the members of the Federal Reserve and what they anticipate for Federal Reserve actions for the remainder of the year. Really, what we saw from comments from the remainder of the Federal Reserve board members is that they anticipate one or maybe no Federal Reserve rate cuts for the remainder of the year. Okay. While we do not have a lot of optimism there on the mortgage interest rate side, I do have a lot of optimism if you are talking about price stability and if you are working with a lot of sellers and being able to command the list price that they are hoping for. What you're looking at here this is a rate of single family building permits, specifically in the Bremerton MSA. That Bremerton MSA covers Port Orchard, Silverdale, and Bremerton, really all of Kitsap. Okay. What we saw was a 35% reduction in the rate of single family permits being pulled in December of 2025. Okay, that is a fairly dramatic decline in new single family building permits. Okay, so in the short term, we may see a kind of that plateau effect on prices, but long term, if we're not building more houses and we continue to see household formations in the Kitsap area, that does bode well for home prices to continue to increase. This data came from the National Association of Home Builders. I went to their economic update on March 18th, put on by the Kitsap Building Association. If you want the rest of these slides, I would be happy to provide those as well. Finally, it is April 15th is coming up here, which is when, as we all know, is when our tax returns need to be filed unless you file for an extension. Most of the time, this time of year, what we are getting from self-employed borrowers is we'll get drafts of their tax returns from the year of 2025, and they say, hey, I think I want to buy a home in this year, 2026. Do you mind take a look at my 2025 returns and let me know if I've got enough income to qualify for a home loan? Okay, well, the good news here is that there is a lot of flexibility when it comes to being self-employed. Even if you had a bad year in 2024, you can file early in 2025, and we can use just a 12-month average if you've been in business for 5 years. Okay, we also have more non-traditional options. So if you had a bad year in 2025 or the first half of 2025, we can look at personal bank statement loans and business bank statement loans, which is really documenting the amount of cash that is moving from your business into your personal account. So there's a lot of different options there. So if you are working with self-employed borrowers and they're a little bit fearful in terms of what they're able to get qualified for, don't hesitate to reach out. We would be happy to look into their options as well. That is all I've got for you here today. I look forward to meeting with you guys next week. Don't hesitate to reach out to either me or my business partner, and I hope you have a great rest of your day.